We'll start, sir. Yeah. Good evening, friends. Welcome to all on behalf of Annanagar CPE Circle. Welcome to all for the first virtual CPE. I'm honored to be welcoming you as in the capacity as a convener. So thank you very much, all members. On behalf of my co-convener and deputy convener, Bashir Garu, senior chartered accountant, also with me. From both of us, bottom of our hearts, thank you very much, all members, for giving this wonderful opportunity for us to serve you, and we'll try our best to keep up the standards of standards which are already formed by our seniors. So we'll start our formal meeting with ICA Motive Sang.
सुप्तेषु जाग्रति यएष सुप्तेषु जाग्रति कामं 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 निर्मिमाणः अदेव शुक्रं अदेवामृतमुच्यते तस्मिन् लोकः सर्वे तदुदाचरितश्च एतद्वैता 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 एतद्वैता.
Thank you to all. So, friends, as you are aware, last 3.5 months we are blocked with the pandemic of COVID-19. So, no one exceptional, whether it may be Aishwarya Rai or Amitabh Bachchan or a normal citizen of India, all are affected badly by COVID. Being a chartered accountants of India, being members of Annanagar CPA Circle. So, as per the institute norms, recently we got the approvals for conducting the meetings virtually. So, this is the first virtual meeting conducting from Annanagar CPA Circle. It's a pride and privilege for me. So, I thought for the first session, how to kickstart our continuous professional education program. So, the best and the only dashing dynamic speaker, our good friend and regular speaker, Gopala Krishna Raju ji, is the first person. Before going to the technical topic, I thought let us discuss and understand from what is the impact of COVID on chartered accountants, either in practice or in profession, how it impacts, how to kickstart our engine of profession of chartered accountancy by starting our wheels, move forward and restart and move on to the next level. So I request Gopal Krishna Raju C before handing over. So I had to thank the founder and as well as senior chartered accountants in our fraternity, in our members, P. Pattabhiram sir is the best person to be taking the first session chairmanship, take the lead and introduce. So I take the privilege is almost 8 to 9 years. And 2011 when it started Annanagar CPE Circle, the foundation person, founder, and it is our respect and honor to the great senior chartered accountant, P. Pattabhiram sir. Thank you very much, sir. So, with your remarks in the first day of 2011 when our CPE Circle started, the same way, the first CPE virtual session starting from today, with your blessings, I request Chartered Accountant P. Pattabhiram sir to give a opening remarks. With that, we'll start our session, sir. Over to Pattabhiram sir.
Good evening to all the members who are now joining with this online Annanagar CPE Study Circle first meeting. Annanagar Study Circle meeting of SIRC was started just 7 years back with a lot of support by both the central and central council and the SIRC members to get permission and to run it. Inauguration by the Commissioner of Income Tax Chennai in just 8 years back, and the first anniversary was celebrated in a fitting manner with the Honorable Tamil Nadu Rosaya Garu. The Anna Nagar Study Circle had a good track of record in conducting the meeting of every month. Leading experts delivered their speeches in all meetings. Many Central Council members and SIRC members were present and gave active participations. A good utterance by members was given by them. They took active interactions with the speakers and in the members. Institute rules and instructions were strictly followed and no remarks were found so far. My kind request to the members of Anna Nagar Study Circle to continue their support and encouragement to the present convener, Mr. C.N. Hemant Kumar and Mr. Bashakar in future. Thank you again for attending the first meeting online.
Thank you very much, sir. It's a blessing for us to take it up the forward, and definitely we also fall under your guidance, under your stepping stones. Will follow and will make the level next for the Anna Nagar CP Study Circle. With this opening remarks, I would like to introduce our first speaker, Dr. C.A. Gopal Krishna Raju, sir. So, if I want to say about our good friend and senior member, so it will take more than a day for the big list is there. Dr. Gopal Krishna Raju, sir, is a versatile speaker and chartered accountant practice, company secretary, and member of the Cost Accountants India, as well as insolvency professional and registered valuer. In the field of registered valuers, his services remarkable, and more than 1,000 plus registered valuers he has produced and trained and still under processing. And with our great applause, and thank you very much, sir. If you want to start the session without a person other than you, who else? So with this great pleasure and proud, I hand over the mic to Dr. Gopal Krishna Raju, sir, for the next 1 hour, 15 minutes to discuss about impact on COVID-19 on chartered accountants, both practicing as well as in industry. As after that, some small introductory points and important points of the direct tax changes amendment recent past. Also, Sal is going to update us, and second session will be on indirect taxation. Over to Gopal Krishna Raju, sir. Thank you very much.
Very good evening to one and all. May I request the convener of Anna Nagar CP Study Circle to permit me to share my screen.
Yes, sir. Take it, sir. Please.
So hope my screen is visible now.
Yes, go ahead, sir.
Yeah, thank you very much. So very good evening to one and all, especially to all the members of Anna Nagar CP Study Circle of SARC of ICAI, Convener CA Hemant Kumar, Deputy Convener CA Bashekar Mattapalli, ever charming and the most sought after convener of Anna Nagar CP Study Circle, CA Dr. Vijayanand, and the founder convener of the CP Study Circle, senior member, respected CA Pattabhiramanji, and immediate past convener and my younger brother, CA Madan Gopal Narayanan. And close to today, we have more than 55 plus participation, being the first CP Study Circle. And I must place on record an appreciation to the convener CA Hemant Kumar and the deputy convener CA Bashekar Mattapalli for making this happen. And my kudos and appreciation to continue this trend. The number should increase every study circle and make it as vibrant study circle in this entire city. And I'm sure this trend that has been set by the COVID-19 impact, I will see this trend as a positive trend maybe if the same study circle meeting between 4 to 6 p.m., if it is conducted in our always the most popular spot called the Saravana Bhavan, where I will be more eager to come there to have that hot bhaji along with the tea. But being a virtual program, the camaraderie and the kind of fellowship, that only we are missing it. But nevertheless, the kind of virtual connect what we are able to make it in this virtual CPE program, I am happy that this trend should continue for every program and the numbers should increase. Today's topic is a very general topic, but I will focus on exactly 20 days before, 20 days back, there was a very special day which was actually announced by our Institute of Chartered Accountants of India. It is called as SMP Day. Generally, Institute celebrates rarely certain days. For example, what you call as a Chartered Accountants Day. So we always fond of actually celebrate the CA Day, which is July 1st. And also our Founders Day, the day when our CA Act became in vogue. And also they have pronounced one particular day as called as SMP Day, the Small and Medium Practitioners Day. And out of the 3 lakh chartered accountants in our country, close to 1,70,000 are there in practice. And out of that, more than 50% of them are small and medium practitioners. Especially we can take 60% of the number, which will be almost more than 1 lakh chartered accountants in our country are small and medium practitioners. And they are actually catering to the MSME sector, the micro, small and medium enterprises sector, and also large organizations. Now, keeping this in mind today, the topic has been very rightly coined by the convener, and impact of COVID-19 on CA professionals. So I will just share with you few very, very important pointers. And there may be a lot of, and I'm sure everyday newspaper, you can see n number of new articles that has been written. But I always try to read those articles which come out with some new ideas and with enterprising news and also a positive impact which the article creates. And especially, even though the entire economy, not only Indian economy, but also the world economy is actually shaken, and maybe I will see this as a correction mechanism. I only perceive this as some correction happening, and maybe in the process there is a slump, and maybe we have come to a buoyancy. I repeat, a buoyancy, which generally will impact the revenue aspect. And especially with respect to CA firms, small and medium CA firms, the impact is quite large because the expenditure is not coming down. It is static, but the income has already come down, and there are some of the firms where income is zero also. So technically the net, the cash flow is not positive, it is actually negative. Maybe our prudent mechanism or the prudent practices, what we implement for our clients, we have also implemented in our life. So those are the professionals who have been very prudent. Maybe they are the real saviors, and they actually they survive because of their savings and their reserves. And others, there is a very big challenge or a question mark for them. But nevertheless, this presentation I'm going to run through and share with you some of the important developments that has been happening because of COVID-19. Especially, I will focus on 3R. What do we call it as revive from this pandemic? Maybe that is not in our hands, but mentally we have to actually come out of it. Whatever may be the circumstances that is happening outside our office or home, maybe within our office or within our home, I am sure we can create that boundary, maybe using sanitizers and keeping ourselves very clean, tidy, and keeping ourselves safe. That is the revival strategy as of today. But my focus will be on the two aspects. One is restructuring our firm financial and restoring back the glory of our profession, especially in terms of naturally more the work, more the revenue. So that is the aspect I'm going to focus on. This traditional practice of, when I say traditional practice, let us not jump to a term called traditional tax practice, traditional accounting practice, traditional representation practice. It is not so. There are the ways at which the practice has been done in a traditional way has to be actually brought to a system called as, not I will say a modern practice, I will say the new normal. It is not modern, it is actually the new normal, and that is the trend today. Especially, for example, I used to discuss with many of our chartered accountant friends who are in the audit practice. And today, audit practice is a very big challenge. But especially because you have to travel, you have to meet, you have to sit with the client, and either the client has to come or you have to go to the client office. This is the traditional setup. Today, the travel is actually cut shorted and only done when it is mandatory, because when you have to do the travel, a lot of challenges are there today. Even though with the limited lockdown facility, we have the flight facility, but we don't have the train facility, or the by road you can travel. Nevertheless, with a lot of challenges and with definitely exposed to the emergency scenario of COVID, anytime you will be exposed to because you may not know where the kind of exposure will be, the risk will be. So you are actually exposed to that. And that is the place where the new normal I'm going to actually discuss with. And I'm sure at the end of my session, you may come out with some queries, questions, and I will request you to put your questions in the broadcast message. I repeat, you can put your questions in the Q&A box. There is a Q&A box here. You can type your questions, and maybe we can take questions at the end. Maybe from the Q&A box itself we can take. That is your chat box. So maybe you can put your queries there, and we can take it a little later. So now let me actually list out the challenges to profession as of the post-COVID. Maybe the list is only illustrative, not exhaustive. Like business disruption. Because of that, our profession is impacted. Over dependence of digital, and even though these things are happening, the amendments to law, the changes to direct taxation, changes to indirect taxation doesn't get stopped. It is happening. And part lockdown, part to open up, all these are happening. And we are slowly moving from the fixed cost regime to a variable cost regime, maybe based on productivity. So, and cost cutting, salary cutting, many challenges are emerging. New things we are coming up every day. So keeping this in mind, this is the new normal for practicing CS. And what are they? The bank audit already, 90% and above the bank audit has been done through digital bank audit. And maybe even Institute has come out with giving the report with respect to why I am not, with the available time, not able to see. And the disclaimer or equivalent to a disclaimer with respect to that. So whatever you have seen, that alone you actually certify. What you have not seen, you are actually having the impediment because of the geographical distance and because of the time constraints and because of the risk exposure due to the pandemic. So today, this has become, I will say, the new normal. Whether it will continue, and there are two, like what Gopinath will have the Nia Nana, the debate. We can have a debate actually, where one side we can say, yeah, this new normal should continue. The other kind of professionals are there, are people are there who actually want the old system, or maybe the existing system. I don't want to say old, the existing system. Now, as the beginning, where as I told you, generally Anna Nagar CP study circle means the faces what we see, the friendship and the fellowship over a cup of coffee, or the Mr. Pattabhiraman and Dr. Vijayanand used to be the best host, and they know. And the moment you actually walk inside Anna Nagar CP study circle, the first thing they will say, முதல்ல காஃபி சாப்பிடுங்க, அப்புறம் காஃபி கடைசியில வேணா சாப்பிட்டுட்டு முதல்ல வடையை சாப்பிடுங்க, அப்புறம் அந்த கிச்சடி சாப்பிடுங்க. So it will be hot actually. So I'm missing all those things. So whether going back to that kichadi or hot coffee era is possible, and the kind of classes, institute classes, where it is, we don't know. The kind of private coaching centers, mushroomed private coaching centers, and big buildings, 400, 500 students attending one particular faculty's class, all where they have gone today. Everything have become digital. So when that has become the new normal, the work from home is an accepted practice. The salary cut is accepted practice. More workload is accepted practice. Work from home is accepted practice. E-audit is accepted practice, and people are accepting, okay, internal audit, do e-audit. Work from home, you do the audit. And that culture has developed, and people are slowly, maybe there are certain firms who are actually adopting to it. Many firms, they find it difficult to adopt, but especially small and medium practitioners. And this session is only for our SMPs. And I am also from a firm, we were SMPs, and my father, when my father and Mr. Pattabhiraman, they are all belonging to the same age. And when they started, they are SMPs. And today, maybe we belong to a mid-sized CA firms. But the point, what we want to share with all of you is, whatever may be the size of our firm, challenges are same for everybody. And especially digital learning, what we are doing today. And technology is not even left the department people. So e-filing to e-hearing to e-assessment to e-penalty to e-appeal. Everything has now become electronic. So keeping this in mind, I'm taking you to a very, very important news, and this is a positive news. And if at all we have been worried about bank audit, oh my God, this year it has happened like this, what will happen next year? There is a very good news that has come in the form of, on 24th of June, exactly 1 month back, the Union government, last month end, the government issued an ordinance. Maybe you can download it if you want. I can give you the link also, to bring 1,482 urban cooperative banks and 58 multi-state cooperative banks under direct supervision of Reserve Bank of India. Now, what is the outcome of this? The outcome is very simple. From the state cooperative audits or the cooperative audits, it will now move to Reserve Bank of India, and they will bring out the concurrent audit systems. And what do you call it as the statutory audit systems. And who will actually do the audit? It's none other than chartered accountants. This is actually a very big step, very, very big step. And silently, and maybe COVID has given government to come out boldly and comfortably, I will say boldly as well as comfortably, bring all these concepts which were pending along. So please look at the next slide. This was a failed attempt. The big step towards forward, it's a failed attempt in the past to do this through an amendment to banking regulation just before COVID-19 pandemic broke out. So they tried this. They tried this in January, February. They couldn't do it. But today they were able to do it. It is because and even parliament sessions are not there. And despite all this, they were able to do it. Even all the ministers and the MPs, MLAs, everyone today, they have, whether they are educated or uneducated, doesn't matter. Technology connects everybody. So right from Pradhan Mantri to the we can call him as the Pratham Sevaka, to the lowermost government official, everyone is only connected through digital. The first point I have shared with all of you is good news with respect to the cooperative bank audit. And this is going to throw open 3 types of audit. Number 1, revenue audit. Number 2, concurrent audit. Number 3, statutory audit. The numbers, this is only the 1,482 banks. Imagine how many branches, how many 58 multi-state cooperative banks. Imagine how many branches. So technically 1,482 plus 58 statutory audits, plus multiply with the number of, maybe you can multiply with minimum. Each urban cooperative bank is having not lesser than 50 branches. Not lesser than. Some of the urban cooperative bankers, they have even more than 100 also. So I am taking a very, very least number of 50. If you just multiply this number of, what do you call it as 1,500 I will take into 50, the number is 75,000 audits. And 75,000 audits are especially statutory audits and concurrent audits. And maybe out of this, at least 20% will come for the revenue audits also. And concurrent audits, statutory audits are mandatory with respect to the size of the activity they have been doing. Even though the number of, the size of each volume will be not that great, but the transaction will be more. The transaction will be more. So, and I am sure you will come across a lot of issues, number 1, and there are even today few cooperative banks, multi-state cooperative banks are not computerized. For your information, they have not gone for CBS. Even though directions has been given, many are actually in the process of going for CBS. The moment it has come to RBI, and I am sure 100% CBS will happen. So many new things you will actually see. So this is number 1 point I want to share with all of you, that the coming years is going to be much brighter, and unless and otherwise we practice ourselves. There are concurrent audit, certificate course on concurrent audit, and we have a separate certificate course on the forensic audit. And I wish these challenges, we need to actually imbibe these techniques and these capacity has to be actually inbuilt, has to be developed. Thereby, whatever the services these banks they want, our fraternity will be ready to actually come forward. Next, I want to share with you the most, next, I will say the first C is cooperative bank audit. The next C is called the cloud accounting or cloud-based software. This is the next in thing. And today, we have Zoho Books, Real Books, Intuit QuickBooks, Reach Business Automation Software, Zip Books, Real Books. These are all Profit Books, Align Books. All these are cloud-based softwares. And what is cloud-based software? I need not actually explain to all of you, but I will explain the opportunity in it, because one and only, none other than chartered accountants only will be the right person to actually encash this kind of professional opportunity in cloud-based accounting. What is that? People are now, there is a very big change that has been brought by none other than the Tally software. I need to acknowledge them for one thing, because they were the guys who actually converted the MSME sector from the manual accounting to the digital accounting. But today, digital accounting, keeping the accounts in your system may not help you. And there are multiplicity or redundancy of the data is actually taking time and killing time. Especially, you have the digital data of the bank data. The bank data has to be again keyed in. So this is a very simple one. But in a cloud-based software, there are tools where the bank software the statements can be immediately synced with your accounting system, and the one single entry will be already posted, because bank entries are posted and the other entry will be automatically to trace. So either it should be debited or credited. For example, these are expenditures. If these are expenditures, your bank account will be credited. So naturally, your other side, what should be debited? The expenditure account should be debited. So probable debit items will be already been scanned and it will post it, waiting as a memorandum entry, waiting for your approval. So we are actually moving from what you call it as a data entry to an AI-based software, artificial intelligence software. So it will actually scan it. So I'm not only mentioning that the bank account is the only place. So there are opportunities where the legacy accounting system has to be converted to the cloud accounting system. For that, what you call as a conversion charges, conversion fees, and training the people, negotiating with the cloud-based service provider, and then implementing that particular software with the customized settings of account code and various cost centers, and then training the employees, aligning with the respective tools and hardware that is available. And not only that, the outsourcing services is going to be the next big thing. Maybe if the client is not comfortable with this, we have to actually have a parallel company. What do you call it as chartered accountants who are in practice. They should have another set of professionals who will actually support this attest functioning chartered accountants. So a team of chartered accountants is required who will not do a test function, especially they have to do the bookkeeping services, and where, okay, you don't do it, chalo, you don't do the accounting work, you only do the keying of data, only the sales, inventory part alone you key it. It will directly be keyed to the cloud. At the back end, the bookkeeping activities will be done by the service providers, the professionals. And there are fees ranging from minimum 1 lakh to 5 lakhs and even above for the conversion from the existing, what do you call it as the traditional system to the cloud-based system. So that is why I'm mentioning for one client. Just imagine the amount of opportunity lying in our Tamil Nadu, and not only that, it is in we can say the Chennai, and today the realization has come to client. Okay, I don't need a full-time accountant in my office. So rather, I will only need those very, very sensitive profile or important portfolio employees who has to actually run the show, and I may need a professional company who will actually support me with respect to the accounting services. And of course, auditor is there who will actually do the what do you call the auditing of the services, and especially teaming up with a cloud-based professional will be the next big thing. And every client will be very comfortable to actually outsource this, because he says, okay, how many is what is the training cost, what is the accounting salary, or what is the accountant's salary per month, and the other related services, what is the cost. Just you put it, it will come to monthly 1 lakh or 1.5 lakhs and all this. And I will say, whether these people will go out of job, no, not required. From there, you can actually employ them in your office, and you can have a very big vertical. And it is not that the chartered accountants only have to do the income tax audit alone, because none other than a team of chartered accountants and hundreds of employees, training them and having a minimum 20 or 50 clients is sufficient with respect to bookkeeping services. And the trend is actually today, because of COVID, the trend is actually, okay, I will only focus on the variable aspects. So I will focus on business, sell, make money. So all these stuff which are all actually compliance, bookkeeping, all those stuff, he will actually want to offshed it. The businessman will be very comfortable to offshed it, and this is an opportunity to actually take this forward. And maybe the time has come where for us to actually mature to okay, all these years I have done this. The traditional practice should be there. Whatever our the number of clients filing, audit, that, this, everything. So that should be there. So that is your bread and butter, and that is what has actually helped us all these years. Should be there, and this should be the additional set of practice. Yeah, additional practice which has to be developed. Maybe if you are focusing on the audit practice alone, the another set of professions should focus on this bookkeeping and I will say the the outsourcing services. So this is two most important outsourcing services: one, bookkeeping; second, compliances. So which is actually taking a hell of a lot of time for the client. And you may actually come to one point: the data is with him. Every time he has to give the data and then do it. That is where cloud-based you have to go. So cloud-based, if you go, you are actually an extended CFO. I repeat, virtual CFO. So virtual CFO services, bookkeeping services, compliance services, and maybe other related services. So all this will now form part of, this will actually, especially for small and medium enterprises. Small and medium enterprises support to SMEs through SMPs. I repeat, through small and medium practitioners with respect to is going to be the next big thing. And this will actually make the professionals, CA professionals, very comfortable and also multiply the revenue. Good. Coming to taxation, and I'm sure the way we are going forward with respect to income tax department, maybe the last time what the scrutiny happened, and I'm sure it was very difficult. Even the moment when e-assessment concept was brought, it was not the assessees or the professionals who were not comfortable with this. The first people who were uncomfortable with this, the department itself, the department official itself. No, I will not have a face-to-face. I cannot. I have the department people. They have that they have the practice of actually meeting people, not otherwise, but then only they will get that feel of the assessee, whether they are genuine or not, whether the transactions are genuine. So by looking at the face, looking at their documents and their explanations, they are actually used to it. So the moment you say e-assessment, the first set of people were uncomfortable where the department guys. So, but today, I think the concept of e-assessment, it can't be actually questioned at all, or it can't be actually use a word, I am uncomfortable. That is the only option. That is the only way today. And maybe I will see Corona, the COVID, as a new avatar, as a new God avatar in actually changing the mindset of the people. Yeah, what is actually the new normal? The new normal in the coming years forward. That is what this change has actually taught us. And the IT department has launched this last year itself, 12th September. And left and right, they have selected scrutiny for almost 58,322 from National Assessment Center. They have served notices also and kept pending for completion. This year it is kept pending, and I'm sure the dates will be extended. Okay. So one good thing about that is, by God, dates are going to be extended. Okay. So these are all some of the things. I think this is the section that actually made it. And current year, 1st February 2020, we had e-appeals. which was actually introduced, and e-penalty was also introduced. So both were introduced this year, and I'm sure the coming years, this two provisions, because they made it very clear that provided no direction shall be issued after 31st day of March 2022, and there will be a notification issued as soon as maybe after the notification is issued, may laid before each House of Parliament. So we are waiting for this e-appeal and e-penalty provisions. So that means the penalty notice will be electronically served, and it will be the hearing will be electronic. You have to explain electronically. Penalty will be confirmed electronically. Maybe if you have to appeal it, you have to file the appeal electronically. The hearing will be electronic, and hearing will be actually virtual like this. So a lot of changes are now happening, and I'm sure my request to the convener of Anna Nagar CP Study Circle is we have to take one by one topic every 15 days or every 2 weeks to CA Hemant Kumar ji. So kindly take a concept like e-penal, e-appeals, concept like e-assessment, concept like the new changes in e-filing of returns, all the e-concepts in taxation, all the e-concepts. Has to be actually slowly, the concept has to be made clear, the procedures, the issues, challenges, and also the learning. And slowly, I'm sure CA Hemant Kumar also will help us in understanding one more aspect, that virtual labs are possible. What we call as virtual labs, and generally we can, all of us can come to the CP program, and we can actually get the demo by the faculty. He will actually log in to the server, and he will actually show us how to actually upload it with so whatever they were doing in the projecting and then showing it, they will actually screen share and then they will show it, which is actually very interesting also, and that is the new normal. The third aspect is taxation. The fourth aspect which I want to share is with respect to the new development areas like valuation, and with respect to insolvency and bankruptcy code. These are the developments, and the new ordinance also has come, and I will, before I go to the last sixth point, I don't want to spend much time here because we are already at 4:43, and I will actually go back to two very important aspects. One is called restructuring practice, which I want to actually make it very clear to all of you that post COVID-19, I am sure a lot of companies will come forward to professionals. Sir, what I have to do, I don't know. I have the experience. I want to actually go to the next level, but I don't know. I'm stuck actually. The moment you see that the entrepreneur is stuck, there is a very big plus with him. What is that plus? His experience. What is a minus? He's actually stuck. He's stuck because of his business receivables have slowed down, payables are more, and solvency may be questioned, liquidity is a short-term problem. All this, if it is there, the only solution is restructure. So restructure, make one firm divide into 2, 3, or bring another company, and this company you merge it, make the merged company to run. So that is where, so whenever the chain is actually stuck, you have to find out where it is stuck. That alone you have to put oil and make the entire thing run. So that is restructuring. And in the process of restructuring, you may have to do merger of firms, demerger of firms, merger of LLP, demerger of LLP, merger of limited companies, demerger of limited companies. 2 sole proprietor will become a partnership. 2 sole proprietor, 3 sole proprietor will become one LLP. All these concepts can evolve, and in the process of restructuring, many cleanup will happen. So, guys, please gear up for the restructuring practice, and I request CA Hemant Kumar also to have a exclusive session. Actually, corporate restructuring is a different topic, and non-corporate restructuring is a different topic. I repeat again: corporate restructuring, non-corporate restructuring. The first line is firms. Firms restructuring is non-corporate restructuring. LLP private limited restructuring is a corporate restructuring. So firms, 2-3 firms amalgamating or merging, so thereby there will be dilution will happen. In the amalgamation, how can happen when actually you make 2 or 3 firms amalgamate together? What are the issues? What are the challenges in Income Tax Act? What are the challenges in the indirect taxation? And how the bankers will visualize it. If there are exposures, how the bankers have to be handled. If there are exposures with the third-party collateral, how the third-party collateral have to be handled. All these aspects have to be addressed. And last but not the least, I will make one observation with respect to Atmanirbhar Bharat Abhiyan. In this Atmanirbhar Bharat Abhiyan, only one scheme. That scheme is actually the first scheme, where you have 3 lakh crore collateral free automatic loan for business, including MSMEs. Here, all of us know there is a 20% entire outstanding credit will be given as on the amount outstanding on 29th of February, and there is a 4-year tenor, interest is capped at 9.25. But I want to share with you one very, very important point. This is the guaranteed emergency credit line scheme. Under this, there is one particular point I want to share with you. This is a fund-based working capital term loan. That is why it is 4 years. Now, this security, please look at the term security. This is the security, the additional working capital term loan facility. So that only I have blowed it up. This is that loan. The additional working capital term loan facility granted under the guaranteed emergency credit line shall rank pari passu. So today, whatever the 20% excess funding that is being given, there are banks. Banks are not doing charity, and government doesn't set to banks, direction to banks that you have to give unsecured loan. It doesn't say that. Please look at this point. It only say collateral free automatic loan means on outstanding 20%. Collateral means additional collateral free. So on the existing collateral, creating a charge is mandated, is actually a mandate, is an internal mandate. And only if it is an internal mandate in 2021, I repeat, in 2021 bank audit, when as chartered accountants you go there, you will again put the same question to them. Hey, it is a 20 crore loan. On the 20% you are given 4 crores. 4 crores, what is the security? No security, so unsecured. Shall I actually write it off? And they have to come out with the new IRAC norms also. But of course, 1 year they need not pay anything. But if you classify under unsecured, possibly the next year you will again get a challenge, because if it doesn't pay, then it will be moved to NPA. So that is why the bankers have to actually have this clause, and it is safety from the banker's perspective. And there are directions given that it should be created within a period of 3 months from the date of dispersal. So that only actually gives the banker a breather, because they are also under a tremendous pressure to actually disburse the loan. And many banks, they have actually already disbursed it, waiting for the 3 months time to actually create this pari passu. And why I am mentioning this particular point here? Because please look at this point. The most important aspect in this scheme is there is no guarantee, no fresh collateral, but conditions will apply. Okay, and when conditions will apply means they have to actually explain the necessity of that additional loan and the genuinity of their borrowing. And how do they prove it? They can prove it only by one thing. Number one, 29th February balance sheet. The date when they are applying, maybe a day before or 1 week before a balance sheet, and the 3 months or 4 month P&L account. That means March, April, May, June P&L account. 29-2, I repeat, 29-2 balance sheet. 1st July balance sheet. 1st July balance sheet, 29-2 balance sheet, March, April, May, June, P&L account. That will actually prove whether they are affected by COVID-19. So, if this is not there, and this is the place where maybe chartered accountants have to actually be impressed upon, and respect to the local branches, study circles, you have to actually impress upon the respective zonal office, regional office, and the circle offices that with respect to this aspect, they have to insist on within 3 months. Within 3 months, not only that they have to create the pari passu, they should also ensure that this 20% outstanding is a necessity rather than claiming it as a matter of right. If they are claiming it as a matter of right without necessity, then question can be asked with respect to propriety. I repeat, with respect to propriety, question can be asked because banks are public sector. So that is my one observation I want to make. And we already have close to 61 attendees. And I will make one more. I will make one more last observation. Yes, one more observation with respect to the new ITR forms, where only one point I want to share. That every new ITR, for example, this new ITR forms, all new ITR forms, they have this, what do you call it as, this 139(1)(7) proviso. With this one point, I will actually conclude and hand over the session, because the new, the next faculty, Mr. R. Subramaniam, is already there on the screen. So therefore, I will actually conclude with this 139(1)(7) proviso. Now, I want to make one observation here with respect to new ITR forms. In new ITR forms, all of you know it has come. And few of the forms are already opened for filing also. And first 4 forms, I repeat, ITR 1, 2, 3, 4. In this first 4 forms, there is a prescription. Are you filing return of income under 7th proviso? Now here, please look at this 3 conditions. Have you deposited amount or aggregate amount exceeding 1 crore in one or more current account during the previous year? Yes or no? Have you deposited amount or aggregate amount exceeding rupees 1 crore in one or more current account during the previous year? Now here, I have my view is that I maybe my interpretation also can be actually fine-tuned. Here, the deposit, I presume that should it not be only cash deposit, should it be even other than cash deposits? Should it be check deposits, because check has also been deposited, any credits? So here, one interpretation that can be taken very loosely is, no, I have not done cash deposit more than 1 crore, so therefore I will not come here. So this is one interpretation with respect to this particular part. But my view, I will actually make it very clear. If there is a current account, and in that current account, the credit side, therefore, generally in current account, there won't be any interest credit. So if the credit side, my total exceeds 1 crore. So my credit exceeds 1 crore. Okay, so here, the 1 crore, should I have to take bank-to-bank transfer? So I have my own interpretation here. The deposit, what I presume here is should be other than the bank-to-bank transfer. So naturally, this interpretation should be only cash deposit. Okay. So if it is bank-to-bank transfer, already it is forming part of it. So therefore, unless and otherwise, they have to make it very clear the total credits in the credit side. So like that, they have to make it. So here, it should be only taken as cash deposit. So have the cash deposit amount aggregate exceeds 1 crore in one or more current account during the previous year with respect to that particular PAN. So I will have 7 PANs. In 7 PANs, my total cash deposit, if it exceeds 1 crore, in each account I have deposited 20 lakhs. 20 to 7, 140 lakhs. So I have exceeded 1 crore. Then if I am not filing return of income, then 139(1)(7) proviso by that 7th proviso, I am compelled to, please look here, are you filing return under 7th proviso, but otherwise not required to furnish return of income? Because I don't have taxable income at all. I am filing only because I have a deposit above 1 crore. Naturally, if the deposit above 1 crore, he should have a taxable income. So exceptions can be there. So this is one very interesting point. Second point is with respect to the expenditure of 2 lakhs for himself or any other person. This point is a very, very important point. Please look at the red color. It is an expenditure. So they don't say whether your expenditure should be cash expenditure or not. So it is an expenditure. So it is debited to your account for himself or any other person. So if I have, for example, Subramaniam as my co-speaker, myself and Subramaniam, we have decided, we have planned last year, 1920, not this year. And this year, nobody can go abroad. So myself and Subramaniam, we have planned to go to Indonesia, and one flight ticket, to and fro, stay there, everything put together is 1.25 lakhs. 1.25 lakhs into 2.5 lakhs, I have paid from my account. So then, even if I am not filing my return of income, then under 139(1) proviso, 7th proviso, point number 2, I have you incurred expenditure above 2 lakhs to foreign travel for yourself or any other person. Okay, so then I have to file my return of income just because I have spent 2 lakhs and above. Similarly, if I have spent more than 1 lakh towards consumption of electricity. So these 3 is most probably, if I am an income tax assessee, already I will say no only. Are you filing income tax return 7th proviso? No. That's all. Only tick no. That's all. But otherwise not required to furnish it will not come. So generally those who are already filing their income tax return, this particular aspect will be no. For those assessees who are filing return for the first time, covered under any of these 3 criteria, then only they have to take this. So this is a new change which they have brought, maybe to expand the assessee base. I repeat, maybe to expand the assessee base. So this is one major change which they have brought. And I want to highlight one more very important aspect is they have actually withdrawn the Rule 31B and introduced the Rule 114H. And through Rule 100, after Rule 114H, they have inserted after H it is 114I. And in this, they have expanded the scope of 26AS. And this actually came in 28th of May 2020. 28th of May 2020. Technically, this section 285BB, actually it was introduced. I repeat guys, 285BB, it was actually a new section introduced on 1st of February 2020. So, I was understanding or I was presuming that this particular application will only come from 2021 financial year and applicable from 21-22. But to my surprise, they have actually gave notification on 28th May itself. And please look at this. They said that they are omitting from 1st day of June. So 1st day of June, what is omitted? 31AB is omitted. That means the original, that old 26AS format is omitted. And new 26AS format will have these 6 conditions. And they say, which is in possession within 3 months from the end of the month in which the information was received by him. So that means what is 3 months then? From 1st of June. From 1st of June, 3 months means before June it is May, before that April, before that March. So therefore, 3 months, please look at which is in his possession within 3 months from the end of the month in which the information is received by him. So therefore, possibly they are indirectly extending this amendment also to Finance Act, the financial year 1920 and 2021. So both years it is applicable. So parallelly, so therefore, from this year onwards, 26AS, based on the 26AS, preparing memorandum balance sheet. Memorandum, what do you call it, a statement of affairs is mandatory because a lot of information with respect to specified financial transactions are going to be reflected in this. So apart from payment of taxes, demand and refund, pending proceeding, completed proceedings, so the entire tax jatakam, financial jatakam of the assessee is being exposed, and maybe in the days to come, the would-be bride will actually ask for, along with the printout of a horoscope, a printout of 26 AS also. Based on that only the bride seeing ceremony or the next phase of maybe the discussions will take place. So that is how the things have been moving, and I must thank Hemant Kumar for this wonderful opportunity given. And if at all there is any questions, I'll be happy to take it. And thank you very much, Hemant. And I must also thank C.R. Subramaniam, who is live now, for being my co-speaker and sharing his thoughts also. So over to Hemant Kumar.
So thank you very much for the vibrant start for our continuous personal education, sir. So one question from our colleague, Chartered Accountant Telephone, sir. CS can help distress funds to restructure their business in so many ways. There is some opportunity for CS. What is your take on this? There are few opportunities that will arise for which CS can help.
Yeah, that's what I already mentioned, that the cloud accounting.
Correct.
So I already mentioned that. So that is the point which he is actually reiterating. I think that is the time, 4:26 was the time I was speaking about the cloud accounting. So he is actually in sync with my point. So thank you, Mr. Ilangovan, for reconfirming that.
Thank you, sir. Thank you very much. And you rightly said in the wonderful speech started from COVID impact and continuing with the latest changes in the laws and how chartered accountant profession, how practicing chartered accountant can reform their bookkeeping and suggest to the clients, and the way we keeping the books of accounts, and then he took to us and latest amendments in the Income Tax Act. Apart from that, he took MSME related areas, which latest updations, Atmanirbhar Bharat schemes, and it's the separate session. Yes, you rightly said, sir. And we have a virtual labs also planning very soon. The next session mostly will be the practical tools, how chartered accountant will be effectively use the Excel based. So one exclusive session we are planning, and apart from that, e-form systems we are planning, and more related to non-corporate structures of firms, LLPs, those type of MSME sectors we are planning it, sir. So with your kind support and suggestions, definitely we'll take it up. So once again, thank you very much on behalf of Anna Nagar CP Circle for the wonderful kickstart of our professional continuous professional education, Gopal Krishna sir. With this, I'll thank you very much, and in this, we'll move on to the next session, second session. So it's my responsibility, and along with my deputy convener, we extended our thanks to the immediate past convener Madan Mohan Narayan sir, which we supposed to be joined in this today's for the gratitude as well as this program, but due to his preoccupied, he could not able to join. Definitely, he promised us he'll join in the next session. So thank you very much, convener sir, and Dr. C.A. Thank you very much, Vijayanand, joining here. And so your services, both father and your services to the CP Circle for the strong foundation and your continuous still support for organizing this first virtual CP itself. Without your support, it will not be happen. So once again, thank you very much for your guidance. We extended your support for furthermore. And with this, the second session will be start, and over to request Dr. C.A. Vijayanand to take up and as a chairman for the second session and proceed for the session. Over to Vijayanand.
Good evening, friends. It is nice to be with you quite after some time, after a gap of 3 months. So a lot of institute regulations with regard to CPE conducting meetings have changed. So now we have come online. This is the new normal. So before getting into the introduction, I have to definitely thank each and every member, without the support of which the credit for the success of Anna Nagar CP Study Circle definitely goes to each and every member. Starting from the day it was founded, for signing the application to the institute for formation of study circle and becoming a member, in organizing the meetings, in selecting the speakers, in selecting the infrastructure, in selecting the venue. Each and every member have contributed themselves, and they have always supported the Annanagar CP study circle by attending it, by contributing to the knowledge, resources, and various other forms, by whatever they can do. So all the credit goes to the members, and all the success is because of the members. Thank you all, and I congratulate the new team to take it forward, and I will definitely support them by whatever means they want the support to be. So with this, I will go on with the introduction of the second session speaker, my friend Mr. R. Subramaniam. He is a BSc graduate, CWA, FCA, and a law graduate practicing as a chartered accountant since 1992. He has over 20 years of professional experience in direct and indirect tax practice and is the founder and senior partner of Subramaniam and Associates, headquartered at Chennai and with a branch office at Bangalore. His area of specialization includes income tax and GST, besides the recently repealed legislations of service tax, central excise, CST, and state VAT. He had delivered presentations in over 500 orientation seminars on GST. He regularly appears before the direct and indirect tax authorities, including CIT, CIT appeals, ITAT, CESTAT, and VAT tribunals. He also tries the GST officials of state and central government. He is an approved valuer accredited to IBBI. He regularly addresses members and students in various seminars and study circle meetings conducted by Institute of Chartered Accountants, Cost Accountants, and Company Secretary. He has been selected as a GST faculty for ICAI by the Indirect Tax Committee. He contributed to the preparation and presentation of technical guide on annual return GST audit brought out by the Institute. He is also participating in various TV channels on issues under GST. With this introduction, I present the second session speaker to you. Thank you.
Thank you, Anand sir. Over to Subramaniam sir. It's a pleasure to invite you for the first virtual Annanagar CP Study Circle meeting of SIRC of ICAI. Over to Subramaniam sir. Subramaniam sir. Hello. I request members for a couple of minutes to connect the speaker. Sir, hello. Need one first.
Hello. Do you have an advance method? Hello. Hello. Hello.
Yeah, able to hear you, sir. Able to hear you. Go ahead, sir.
Okay. PPT. At the outset, I am thankful to the convener, Mr. Hemant Kumar sir, and deputy convener, Mr. Bhaskar, and the chairman of the sessions, Dr. Vijay Anand, and my co-speaker, Mr. Gopalakrishna Raju. Thank you for giving me an excellent opportunity to share my views, thoughts on the relaxation in GST COVID-19. What are all the notifications being issued? So when Hemant Kumar called me, he asked me, sir, you have to speak on the GST. I told him what topic. He told me, sir, relaxation in respect of GST, particularly COVID-19. Then I asked him, sir, whether I have to speak on issues or on the notification. He told me, sir, you speak only on the notification. So therefore, I am going to cover only on the notification. And then some other important issues also I am going to speak. So we will go one by one, all the latest notification. I am not going to cover the old notification. These are all the latest notification which are all is applicable. So therefore, we will cover the latest notification. The first notification. First notification, revised due date for GST or 3B for a large taxpayer. So large taxpayer means a taxpayer whose aggregate turnover in the preceding financial year is more than 5 crores rupees. So they are called as a large taxpayer. For them, what is the due date for GST or 3B? Yes, sir, audible?
Yes, sir. Yes, sir. Audible, sir. Go ahead.
For them, what is the due date for GST or 3B? What is the interest? Whether they are liable to pay the interest or not, all those things which we are going to discuss, and then up to rupees 5 crores. Now let us discuss about the dealer whose turnover is more than 5 crores. More than 5 crores for the period February, March and April. The due date for GST or 3B is not at all is extended. Please be with me. The due date is as usual 23, 24, 25. No extension at all. For February 2020, the due date is 23. March is due date is 24. The April is due date is 25. No change at all. But the notification says, no problem. Please you file it within 15 days from the date of the due date. If you file within 15 days from the date of the due date, then you are not required to pay any interest. So therefore, for February month return, the due date is 23 days, ends on 4/4/2020. So therefore, for the month of February 2020, you have to file it before 4/4/2020, then no interest at all. For the month of March, if you file it within 15 days, that is 5/5/2020. The due date is 24, 15 days for 5/5/2020. Therefore, you have to file it before 5/5/2020. In the month of April also, the date is 4/6/2020. So, if you file within 15 days from the date of the due date, no interest at all. For those large taxpayers, sir, if I didn't file, what will happen? Is the next question. If you didn't file within the date, then the interest will come. Then the notification give further relaxation. You please file it before 24/6/2020. For February, March and April, you file it before 24/6/2020. Okay, if you file before 24/6/2020, then the rate of interest is 9%. Otherwise, the rate of interest is 18%. So this is the first clarification in the notification. For the month of May 2020, what happened? For the month of May 2020, the date is extended up to 27/6/2020. So therefore, after 27/6/2020, you are liable to pay at the rate of 18%. For June 27, for July 28, August 29. So these are all the due date for GST or 3B for the large taxpayer. So therefore, these large taxpayers, they have to file it. Therefore, the concession is only for the month of February, March and April, that to 15 days, and you have to file it before 24/6. If you are not filing it before 24/6, you are liable to pay at the rate of 18%. From May, June, July 2000 onwards, it is a normal Whatever, if it is not filed within the due date, you are liable to pay at the rate of 18%. So this is the first in respect of the due date of GSTR 3B for the large taxpayer. So this is the first. The second important is, now I will give you with some illustration related to this type of dealers. Say what happened, the original notification, say they have first issued the notification to 30 to 35. In the original notification, they have clarified that if you are not filed within the due date, then the interest is to be calculated from the original date. So that means whatever the original date, from the date you are liable to pay the interest at the rate of 18%, they have clarified. So now that is being is done away. Now what they are telling is that you file it within the due date and file it before 24/6. If you are not filed it before 24/6, then you are liable to pay at the rate of 9% prior to that. After that, you are liable to pay only for the balance period. You are liable to pay at the rate of 18%. Now let us see the example. So in the month of March 2020, my due date of filing the GSTR 3B is 24. Date of filing my GSTR 3B, I filed before 2/5/2020. I filed before 2/5/2020. What the notification says? The notification says you have to file it within 15 days. What is the 15 days? The 15 days will expire on 4/5/2020. I filed before that. Therefore, there is a number of delay, only 11 days. The notification allows up to 15 days. Therefore, no interest at all. The same argument, the due date is 24, but I filed my return on 25/2020. 25/2020. So therefore, here there is a delay of 30 days. Yes, there is a delay of 30 days. What it says? The Act is very clear. The Act says out of 30 days, 15 days no interest. The notification says up to 15 days you file it. So therefore, 5/5 no interest at all. The balance 15 days you are liable to pay at the rate of 9% interest. That's all. So this is for the month of March if it is filed on 25. If it is filed on 26, what will happen? The due date is 24, but he is filing it on 26. But anyway, he is filing prior to 24/6, correct? Therefore, the rate of interest is only 9%. No problem. But there is a delay of 61 days. Out of delay of 61 days, 15 days is a interest free, zero interest. 15 days, because the notification says I will allow you up to 15 days. You file it. The balance out of 61, balance 15 days is almost 46 days. The 46 days you have to check whether they have filed prior to 24/6 or after 24/6. They filed prior to 24/6. They filed it on 26 itself. So therefore, they are liable to pay interest only at the rate of 9%. The next example is 24 is a due date for the March month return, but he filed it on 24/6/2020. There is a delay of 65 days delay. There is a delay of 65 days delay. So first 15 days, zero interest, no problem at all. The balance 50 days, whether he filed prior to 24 on or before 24/6, yes, he filed it on 24/6/2020. So therefore, he is liable to pay interest only at the rate of 9% for the balance 50 days. Only at the rate of 9% for the balance 50 days. The next important is the next example is due date is 24, but I filed it on 36/2020. I filed it on 36/2020. The notification says very clearly you have to file it prior to 24/6. Then only you are eligible for 9% interest. Otherwise, you are not eligible. Here, he filed it on 36. The 6 days he is liable to pay at the rate of 18%. 15 days here, zero rate at interest. The balance 50 days, he is liable to pay at the rate of 9%. So this is only in respect of the large taxpayer. So therefore, the large taxpayer, you must be very, very careful. The date is not being extended. Only 15 days is given. After 15 days, you have to file it before 24/6. If you are not filing it before 24/6, then you are liable to pay the interest, and whatever the day you are liable to pay the interest at the rate of 9%. So this is a If it is an after 24/6, then the rate of interest is 19%. The rate of interest is 19%. Now, the second taxpayers, small taxpayers. You know that the small taxpayer, there are two types of states. For Tamil Nadu, Pondicherry, and Kerala, Andhra, the due date is 22nd. In other states, Mizoram, Madhya Pradesh, the due date is 24th of the subsequent month. Now we will see that up to 5 crores turnover. Up to 5 crores turnover. See here, February, the date is 30th June. March, the date is 3rd July. April, 6th July. May, 12th September. June, 23rd September. July, 27th September. So these are all the date is given through the notification. You have to file it within the date. If you file within the date, no interest at all. If you file within the date, no interest at all. So therefore, in the month of April, you have to file it on 6th July. In the month of May, you have to file it before 12th September. In the case of June 2020, you have to file it on 23rd September. If you file it within the due date specified in the notification, then there is no interest at all. Sir, I didn't file within the due date.
Speaker sir, sorry to interrupt. Speaker sir, sorry to interrupt you. We want to show any presentation? Slides?
Percentage, it is going on, no? You are able to see, no?
No, sir.
That's why I asked you, 1 minute. Oh, PPT.
You put present.
Sorry,
Start
sir.
present.
I thought that you are seeing it.
Start present. Down we can have start present.
Option in here.
Start present.
Hemant, start percent, Hemant sir.
Aji,
Start percent எதுவும் இல்லையே.
இருக்கும் அங்க ஸ்டார்ட் பிரசன்ட் இருக்கும் பாருங்க சார். மேல
Start sharing னு
ஷார்ட் ஷேரிங்.
அது பட்டன் டிசேபிளா இருக்கு. நீங்க ஷேர் பண்ணு இது பண்ணுங்க.
ஷேர் பண்ணியாச்சு. உங்களுக்கு கொடுத்தாச்சு. அங்க ஸ்டார்ட் ஷேரிங் இருக்கும் பாருங்க.
இப்போ கொடுத்துருங்க. இப்போ ஷேர் ஆகுது. ஓ, ஐம் சாரி. சார் ஹலோ சார் ஒரு நிமிஷம் இல்லை சார் ஷேர் ஆகுது சார். ஸ்டாப் ஷேரிங் தான் காட்டுது ஆப்ஷன். ஷேர் பண்ணியிருக்கேன் சார். எனக்கே வந்து ஸ்டாப் ஷேரிங் தான் ஆப்ஷன் இருக்கு சார். அதாவது ஷேர் ஆகிட்டு மாதிரி காட்டுது.
Speaker sir, I think you can. I think you can. He could not able to make it up. I request to continue. Continue.
Hello.
Yeah, I request to continue with this. We could not able
continue, but the sharing. What happened? The sharing.
We already given the powers. Only thing you have to. We given the powers like GKR sir.
Sir, it will be easy.
Okay, leave it, sir. Anyhow, it's part of the game. You can continue, sir. Sorry.
Finish
Sir, you can continue, sir. Sorry.
Yapa, Dinesh. Hello.
Yeah, go ahead, sir.
Yes, sir. I'm very sorry.
No problem. Go ahead, sir. Sorry. Sorry to trouble you, sir. Go ahead.
So, so for those small taxpayers, there is a due date as per the notification number 51/2020. For the month of February, 30th June is the date. For the month of March, 3rd July, April, 6th July, May, 12th September, June, 23rd September. Like that, there is a due date. So you have to file it within the due date. So whatever the due date is there for each and every month for tax period, you have to file in within the due date. If you are not filing within the due date, then what will happen? You are liable to pay the interest. Now through this notification, there is some relaxation. It says if you file it before September 2020, then in such a situation, you are liable to pay only at the rate of 9%. If you are filing after September 30th, you are liable to pay interest at the rate of 18%. So therefore, for the small taxpayer, whatever the due date, you have to file it within the due date. If you are not able to file within the due date, no doubt you are liable to pay the interest. The interest is up to 30th September 9%. After 30th September, the interest is at the rate of 18%. So this is a two notification is very, very important. The first notification, large taxpayer, for February, March and April, you have to file it within 15 days. If you are not filing it within 15 days, then 24/6/2020, you have to file it. If you file it within 24/6/2020, then in such a situation, the rate of interest is 9%. Otherwise, the rate of interest is 18% for the large taxpayer. For small taxpayer, the return is to be filed within the due date. Whatever the date is mentioned in the notification, you have to file it within the due date. If you are not able to file within the due date, then in such a situation, you are liable to pay the interest, but there is a relaxation. You have to file it at least prior to 39. If you file it prior to September 2020, you are liable to pay interest at the rate of 9%, or otherwise you are liable to pay, after that you are liable to pay interest at the rate of 18%. So this is a two important notifications, you must be very clear. The next, this is another type of the dealers, that is those who are in other states, that is Madhya Pradesh, Himachal, those states, the date is different. Tamil Nadu, Andhra, Karnataka, Pondicherry, the date is different. So therefore, you have to accordingly apply. The next important is August 2020 return. Sir, it is there up to July. What happened to August? August 2020 return is extended only for a small taxpayer. Those taxpayers whose aggregate turnover is up to rupees 5 crores, for them only the date is extended. For Tamil Nadu, Karnataka, for them is 1/10/2020, other state is 3/10/2020. The date is extended for August 2020. Now we will come into the GST 3B late fee for July 2017 to July 2020. It's very, very interesting. Late fee for the tax period from July 2017 to July 2020, if it is filed prior to 39/2020, then the late fee is reduced. So therefore, those who have not filed the return, GST or 3B, from July 2017 to July 2020, they can file it now before 13, on or before 39/2020. They filed it on or before 39/2020. In case of a nil return, no late fee at all. In any other cases, the 500 rupees is a late fee. Very, very important is 250 rupees under CGST Act and 250 rupees under SGST Act. 500 rupees. This 500 rupees, very, very careful for each tax period. That means for each month. So from July 2017 to July 2020, if you are not filed, and if you are going to file it and you are going to offer some income or offer some outward supply, then in such a situation, you are liable to pay the late fee at rupees 500 per return. But very, very important is whether you are liable to pay interest or not. Yes, you are liable to pay the interest. You are liable to pay the interest. The late fee alone is, they have given some relaxation. So this is the second important. Third important is in respect of GSTR 1 return. GSTR 1 return. GSTR 1 return date is not at all is extended. GSTR 1 return is not at all is extended. But if you file it within the due date, then the late fee is waived off. For March, if you file it 10/7, no late fee. For April, if you file it on or before 24/7, no late fee. For May, if you file it on or before 28/7/2020, no late fee. So therefore, the late fee alone is waived for GSTR 1 return. Due date as such not extended, but date till which the late fee is not applicable, that is being is extended. Other return, GSTR 5, GSTR 6, input service distributor, casual taxable person, non-resident taxable person, GSTR 7, TDS return. These are all returned. The date is extended for up to 31/8/2020. Now, this is a very, very important amendment in Rule 36(4). This is an important amendment in Rule 36(4). What is this rule? Rule 36(4). Sir, now you are able to see the presentation, sir?
No, sir. No, sir.
Oh, 1 minute, sir. 1 minute.
கீழே ஷேரிங் இருக்கும் பாருங்கப்பா.
Sir, 1 minute, sir.
No problem.
I will ask the person. அது PPT ஷேர் ஆக மாட்டேங்குது.
ரெஃப்ரெஷ் பண்ணுங்க சார். ஒரு வாட்டி ரெஃப்ரெஷ் பண்ணுங்க. மேல ரெஃப்ரெஷ் பாருங்க. அட்டெண்டன்ஸ் மேல ரெஃப்ரெஷ். அட்டெண்டன்ஸ் மேல ரெஃப்ரெஷ் பட்டன் இருக்குல்ல, அதை ரெஃப்ரெஷ் பண்ணுங்க. சார், அந்த பிரசன்டேஷன் எனக்கு மெயில் அனுப்புங்க சார். இட் பாசிபிள்?
ஹலோ,
அந்த பிரசன்டேஷன் எனக்கு மெயில் அனுப்புங்க சார். நான் மெயில் ஐடி அனுப்புறேன்.
மெயில் ஐடி அனுப்புங்க சார்.
நான் வாட்ஸ்அப் அனுப்புறேன்.
அதை அனுப்புங்க, நான் அனுப்புறேன். பிபிடி கேட்குறாங்க.
நீங்க கண்டினியூ பண்ணுங்க சார். இதுக்கு
இல்ல இட் வில் பி வெரி ஈஸி ஃபார் them. That's why I'm very easy to. வந்துட்டீங்களா?
வெரி
அப்போ ஃபர்ஸ்டே உங்களுக்கு மெயில் ஐடி. சார், இப்போ உங்க மெயில் ஐடி அனுப்பிச்சோடனே பண்ணிடுறீங்களா நீங்க?
நீங்க ப்ரொசீட் பண்ணுங்க. உங்க பேருக்கு பண்ணுங்க.
So therefore, now we have seen what is the due date for the small taxpayer and large taxpayer, and what is the due date for GST or 3B. What is the consequences for the interest? So interest which you have to work out accordingly. If you filed it within the due date, there won't be any issues at all. If you have not filed it, then you have to go through the notification. If it is more than 5 crores, 24/6/2020, you have to file it prior to that. Otherwise, you are liable to pay at the rate of 18% for the dealers, large taxpayer dealers. Other taxpayer dealers, you have to find out what is the due date, and accordingly, you have to discharge your interest liability. That is very, very important. For late fee is very important. Late fee is the late fee is July 2020 to July 2017 to July 2020. The date is being is extended, and August 2020 return is also being is extended. 110 and 310/2020. Now we will see the important amendments. Amendment in Rule 36(4). It's a very important amendment in Rule 36(4). What is Rule 36(4)? Rule 36(4) says Normally, you are eligible to claim the credit, whatever you have purchased the goods based on the invoices you received, you will claim the credit. Even section 16 also says that you please fulfill all these conditions and you take the credit. So therefore, we will take the credit based on the invoice. But this rule 36.4 says it should not be based upon the invoices, but it should be based on the amount is reflected in GSTR. So therefore, each and every month you have to work out what is reflected in the GSTR. Suppose say for the month of June 2020, I have a credit to the extent of rupees 1 crore. So I received the goods, I am having the invoices, I fulfilled all the conditions. But the invoice is there, goods is received, I am having the credit to the extent of rupees 1 crore. But in my GSTR 2A, it is reflected only 80 lakh rupees or 70 lakh rupees. Then in such a situation, the rule says, I will not allow you 1 crore. 1 crore, no doubt, you are having the invoice and you received the goods and you fulfilled all the conditions. Yes, but this rule says, no, whatever is reflected in GSTR 2A, that credit plus 10% I will give. So therefore, rule 36.4 says, first you work out what is the eligible credit. In the eligible credit, I will give you another 10%. That's all. That means if 70 lakh is there plus 10%, 7 lakh totally is 77 lakh rupees. Totally is 77 lakh rupees. So now it is, yes, 77 lakh rupees. So therefore, you are eligible to claim only 77 lakh rupees. You are having the credit invoices with you to the extent of 1 crore, but you can claim only 77 lakh rupees. Now the rule says 36.4 says for the month of, it starts from for the month of February. So you have to take the credit from the month of February. So from February onwards, from February, March, April, May, June, July and August 2020. You are not required to see or you are not required to compare what is your credit, what is reflected in the GSTR. What you have to do is, you have to consolidate all and then compare and file the return in the month of September. So therefore, normally the rule says that you have to compare for each and every month, and whatever there in GSTR 2A, eligible credit in the GSTR 2A, plus 10% is allowable. Plus 10% only is allowable. But because of this COVID-19 situation, the notification says for the month from February to August, you are not required to see the GSTR 2A at all. Suppose in the month of February 2020, I am having the invoices and credit to the tune of 1 crore, whereas in GSTR 2A is only 10 lakh rupees. Even in such a situation, I can take 1 crore. Earlier, the rule says, no. GSTR 2A is only 10 lakh rupees plus 10% only I will allow. Now the rule says, because of COVID-19, it says, from February to August, you are not required to compare each and every month. Whatever the invoices you are having, whatever the credit is as per books of account, you please take it. And then you start comparing in the month of September return. So therefore, from February to August, you have to take all the credit as per books and the credit as per GSTR 2A and then come back and then take 10% in the month of September. So this is a welcoming amendment in respect of 36.4. If you ask me personally whether this 36.4 rule is whether 36.4 rule is correct or not, my view is it is an ultra vires. It is not being notified. So therefore, there is a lot of petition is also being filed. But as on today, there is a rule. Therefore, we have to follow this rule. So this is a very, very important. This is a welcoming important, no doubt about it. The next important is composite taxpayer. The composite taxpayers. Amendment in rule. Yes, sir. Next, sir. Composite taxpayer. The composite taxpayer, CMP 08, quarter ending return. Quarter ending 31/3/2020, the date is extended to 7/7/2020. For GSTR 4, the date is extended, the date is normal date is 34th, the date is extended to 15/7/2020, the date is extended for the composite taxpayer. The next important is a CMP 08. Next slide, sir. CMP 08, CMP 02. The CMP 02 is an intimation. What is the intimation, sir? I wanted to opt to the composition. So therefore, I am going to give an intimation. I am going to give an intimation for the year April 2020 to March 2021. That date is extended up to 36/2020. And ITC 03, whatever the credit is there, that we have to intimate stock, that is also is extended up to 31/7/2020. So these are all the date is extended. The next important is, this is a very, very important notification. The notification number 35/2020. We will spend some time on this. This is a very important notification. This was amended, the notification number 55/2000. What is this notification? The first paragraph, it talks about the department, officers, department. The second part is in respect of an assessment. The first part is, it talks about the completion of any proceeding. The officer, he has to complete any proceeding within the time. Or passing an order, he has to pass an order. Or he has to issue a notice within the time as stipulated in the Act. He has to give an intimation within the stipulated time. He has to sanction, approval, all the things for the officer. If it is falling due between 20th March 2020 to 30th August 2020, very, very important, that stand is extended up to 31st August 2020. So therefore, the officer, he has to issue the notice. The time period is going to complete on 21st March 2020, and he can issue up to 31st August 2020. You cannot take a stand saying that, sir, this is a notice, you have to give it within 15 days, you are not given within the 15 days, therefore the show cause notice is invalid. Therefore, the proceeding is invalid. So this type of thing is not possible because it gives the powers to the officer. This notification gives the power to the officer. If the completion of any proceeding, passing of an order, issue of show cause notice, intimation, sanction or approval, if it falls between 20th March 2020 to 30th August 2020, then the date is extended up to 31st August. Therefore, the officer is having a time up to 31/8/2020. If it falls between 20th March 2020 to 30th August. The next important is, sir, if it is an appeal, sir, the appeal due date is, sir, I received an order from the adjudicating officer. I have to file an appeal. The 90 days is falls between 20th day of March to 30th April of 2020. In our office also, we are having 2 or 3 appeals. The date is 20th August March 2020 to 30th August 2020. So, if the appeal has to be filed, the 90 days expire between 20th March 2020 to 30th August 2020, then in such a situation, you can file up to 31st August 2020. So, filing an appeal, very, very important. So, filing an appeal, if the time period is expired, and if it falls between 20th March 2020 to 30th August 2020, then the date is extended up to 30th. Sir, you have to make an application. The application date is expired between 20th, or you have to furnish such a report, or you have to give such a document, you have to file such a return. All these, the date is, if it is falls between 20th March 2020 to 31st August 2020, then in such a situation, the date is extended up to 31st August 2020. So the first initial notification, it talks about 35 notification, it says up to 36, and then the new notification, the notification was amended. The new notification 55/2020, it says up to 31st August. So therefore, you can file an appeal up to 31st August 2020. So this is very, very important. But it has certain exception. That's very, very important. It has certain exception. The first exception is 1, Chapter 4. One is the Chapter 4. What is chapter 4? This is not applicable for chapter 4. Chapter 4 means the time of supply of goods or services. Time of supply of goods or services. As you know very well, for services you have to raise it within 30 days. For time of supply of goods on or before the removal of goods, that is not applicable. These notifications cannot be used for time. So therefore, that is not applicable. One. So therefore, time of supply, you have to go as per the time of supply. This is a one. The second thing is this notification is not applicable. Sir, the next slide, sir. This notification is not applicable. Second is section 10.3. What is section 10.3? Section 10.3 says if the composition dealer turnover exceeds 1.5 crores, so they have to come into the normal. They cannot take a stand, sir, my turnover is exceeds on 23/2020, therefore the date is extended 31/8, so therefore I can come. So that is not applicable for them. Once it exceeds, yes, they are coming into the normal scheme. So that is the second. The third important is section 25. Sir, my turnover exceeds, aggregate turnover exceeds 20 lakh rupees. Yes, for them also the date is, sir, can I take up to 31/8? No, you cannot take up to 31/8. So that is also is that is also not applicable. Section 27, in respect of NRI, non-resident taxable person, they have to register within 90 days. So that is also not applicable in respect of this notification is not applicable for this NRI also is not applicable. The next important is section 31, time limit for issuance of the invoices. This notification is not applicable. Section 37, outward supply. This is being separately dealt with notification number 51 and 52, which we have discussed. So therefore, this notification is not applicable. To that extent, whatever is covered there, that is being is applicable. Section 39, that is also not applicable except GSTR 7, TDS, TCS. That return is yes. Other than that, this notification is not applicable because section 39 we are dealing with separately through separate notification. Therefore, that is also not applicable. Next important is section 50 interest. 50 interest which we have discussed. So therefore, that is also not applicable. Only to the extent it is being is separately is dealt with through some other notification. The next important is section 68. Section 68 talks about the inspection of the movement of goods. Don't take a stand saying, sir, this notification is applicable to me. So therefore, up to 31/8/2018, you cannot touch my vehicle. You cannot check, whether I have raised the e-way bill. The officer, he has a power to inspect the goods. Correct. So this notification is not applicable. Dealer, they cannot take a stand. No, sir, up to 31/8 is exempted. Therefore, up to 31/8 you cannot inspect my vehicle or conveyance. So therefore, that is also not applicable. Section 69, power to arrest. Suppose if the person used the input tax credit without invoice or without fake invoices. In such a situation, if the officer wants to arrest the person cannot take a stand. No, sir, please go through the notification number 35 and 55. The date is extended for up to 31/8. Therefore, you cannot arrest me up to 31/8. That is also not possible. It says, no, this notification is not applicable for section 69 also. So therefore, these are all the, and then section 122. 122, levy of penalty, raising an invoices without delivering the goods, or delivering the goods without issuing the invoices, contravening the provisions of the act, or taking the credit without invoices. These are all the penalties prescribed in section 122. So therefore, for 122, this section, this date is not applicable. Liability of partners of a firm to pay tax. If the firm is not able to pay the tax, the partners, they are liable to pay the tax. In such a situation, the date is not extended. That's section 129, retention of goods and vehicle. So therefore, the officer has got a power to retain the goods and confiscate the goods. For them also, the date is not extended. So therefore, that is very, very important. So therefore, you cannot take a stand on, no, sir, notification 35 is applicable or 55 is applicable. The 55 gives, these are all the exception. These are all the cases that notification is not applicable. The next important is the PMT 09. Next important is extension in time limit for issuance of a refund order. So what happened? The officer issued a notice for a rejection of a refund claim, but he has to pass an order. So for passing an order, there is a time stipulated in the act. But if the officer is not able to pass an order because of this COVID-19, can we take a stand? The order itself is invalid. So to safeguard this, the department, this notification is being issued. This notification says notice issued for rejection of a refund claim, where the time limit for issuance of the order, the officer he has to pass an order for rejecting the, first he has issued the show cause notice, he asks a reply from the assessee, and then he has to pass an order. But if the order fall during the period from 20th day of March 2020 to 30th day of August 2020, so therefore he has to pass an order. The time limit for issuance of an order falls between 20th day of March 2020 to 30th day of August 2020. The date is being extended 15 days after the receipt of your reply. So therefore you have to give a reply. From the date 15 days the officer has got a time, or 31st August, whichever is later. So therefore you will work out 31st August or 15 days of your reply, whichever is later, the officer he has to pass an order for rejecting the refund. So therefore he has issued an show cause notice, but the date is falls between March 2020 to 30th August. Then in such a situation, the officer he has got a power up to 31st August 2020. That is, this is very, very important. The next is PMT09. It's very, very important. Say what happened for PMT09. Say normally I have to pay the tax, either CGST, SGST or IGST cess. I have to pay the tax. Sir, I have to pay IGST. But what I did was filing my challan, I paid it as a CGST. Sir, I have to pay only CGST, SGST. But I paid it as a IGST. Now what I have to do? Earlier, the act is very clear. Whatever you paid wrongly, you pay it and you claim the refund. So therefore, the act says that you please pay it again. Whatever you have to pay, you pay it, and then whatever you paid wrongly, you claim it as a refund. So this is being represented to the governments. Now the government, from 8/6/2019, my governance is right, PMT09 form is there. In the PMT09, there is a major head and there is a minor head. The major head talks about CGST, HGST, IGST and cess. Minor head talks about interest, penalty, fee, etc. Suppose if I pay it wrongly, there is almost 20 boxes in PMT09. You can change it whatever you want. Sir, I have to pay interest, but I paid it as a penalty. Now you can change it. Sir, I paid CGST, but in fact I have to pay IGST. You can change it. From CGST you can change it to IGST. From IGST you can change it to CGST. From penalty you have to change it CGST. From CGST you have to pay to interest. Therefore, the 20 boxes you can change it. That is important. But very, very important is you have to do it before you appropriate the amount. So that means today I paid it wrongly. Before filing your return, before you appropriate, you please change it. After filing the return, after appropriated, it is not possible. So therefore, whatever the tax is paid wrongly, now PMT09 allow you to adjust it. This is an welcoming amendment under the welcome notification. This is very, very important. The next important is the verification of filing of Form 3B through EBC. Say what happened? First they allow the individual, they can file the return through EBC. But for the companies, what happened? Even in the COVID period, they are not able to access the digital record, digital image. So therefore, even though they are covered under the Companies Act, now this notification says even the company, they can file GSTR 3B and GSTR 1 from 21st day of April 2020 to 30th day of September 2020. They can file GSTR 3B and GSTR 1 through EBC. So that is a welcoming amendment. The company, they are not able to get the digital, therefore they are allowed this verification of filing of form. The next important is a short messaging. What is this short messaging? This is a Rule 67A effective from 8/6/2020. 8/6/2020. 8/6/2020. Sir, am I audible, sir? Hello? Hello? Hemant, sir? Hello? Hello?
Sir, go ahead, sir. Go ahead.
The next important is the messaging, short messaging. So what is this short messaging? Short messaging is a Rule 67A. Rule 67A provide for furnishing a nil return. So if your 3B is for a particular month is nil, that means all your column in the 3B is nil. No entry is required to be filed. Even if there is any reverse charge liability, you cannot come under this. Therefore, the turnover is nil. You are not liable to pay under reverse charge. You are not required to pay any late fee. Everything is nil in the particular column, in the column in the GST or 3B. And in such a situation, you can send nil return through short message. So, therefore, the dealers, they can file GST or 3B through message, provided that turnover should be nil and all the column in GST or 3B should be nil. Like that GSTR1 also. GSTR1 also, if it is a nil, then in such a situation, the dealers, the registered dealers, they can file nil return through message. So this is the next important amendment. This is applicable. The next is a extension of validity bill. So the e-way bill, what happened? Extension of validity of e-way bill. So they have given, first what they did, e-way bill during the period 23 to 15/4 is being extended up to 34. But COVID-19 is extended up to 31st July. So therefore what they did, second they have issued another notification. In the notification, e-way bill generated on or before 24/3/2000 and very important, and validity period expired after 23/2020 to 15/4/2020. The validity period is further extended up to 31/5/2020. The validity period is further extended up to 31/5/2020. The next what happened? Then the next notification they have issued, notification number 47/2020. What they did, because of continuations of COVID-19, what they did, e-way bill generated on or before 24/3/2020 and whose validity has expired on or after 23, the validity period is extended up to 36/2000. So therefore, the condition is very important. Condition is e-way bill generated on or before 24/3/2020. If the e-way bill generated after 24/3/2020, this notification is not applicable. So therefore, e-way bill generated on or before 24/3/2020 and whose validity has expired on or after 23, the validity period is extended up to 36/2020. So this is another important notification. The next important, this is our notification, extension due date of annual return and reconciliation statement for the financial year 2018. So you have to file your annual return and you have to file the reconciliation statement. For the earlier notification, I am not able to remember the notification. If my remembrance is like 31, the notification date is extended up to 36/2020. Through this 41 for 2020 notification, the date is extended up to 39/2000. So therefore, for the financial year 18-19, GSTR 9 and GSTR 9C, the date is extended up to 30th September 2020. So that is the date is extended up to 30th September 2020. The next important is
Speaker, last 5 minutes.
yes, sir. The next important is the extended date for GSTR ITC4, ITC04, the date is extended up to 31/8/2020. Letter of undertaking also the date is extended up to 31/8/2000. Now, very important clarifications, 2 or 3 issues which I would like to point out. These are all the clarification issued by the government. The first clarification, sir, I received an advance. I raised the invoice also, but the contract is cancelled. Then in such a situation, you can issue the credit note. Yes, he has raised the invoice. Therefore, the credit note can be issued under section 34. And if there is no outward supply, then you can file RFD 01. So there is no problem. Here, the invoice is being issued. If you go through section 31, 31 says the invoices can be issued even on or before the supply. Therefore, the invoice is issued. The next important situation is advances received. I received the advance, but document advances received. I also raised a receipt invoice, receipt voucher, but contract is cancelled. Contract is cancelled. I paid the tax. Then in such a situation also, here you cannot issue the credit note. The reason is you are not raised the invoice at all. So therefore, you can ask for the refund by filing the RFD 01. This is the second. The third important situation is, sir, goods is supplied. Goods is supplied and the invoice is issued. I have issued the invoice, goods is supplied, but goods is returned. In such a situation, you can issue the credit note. You can also ask for the refund also by filing a RFD 01 if there is no outward supply. The next important is a CSR activities. Very important. CSR activity. We'll go through another 2-3 months. One is the ITC expenditure. On expenditure incurred towards procurement of various items to be used while performing the official duties. So, while performing the official duties, I purchase certain machinery, I purchase sanitizer, I purchase masks, which are all used for the office purpose. Then in such situations, you can take the input tax credit. This is one. The second important is a CSR activities. What is the CSR activities? Sir, this COVID-19, we have incurred certain CSR expenditure. Whether we are eligible to claim the credit, there are 2 or 3 views in respect of CSR expenditure. My view is you can take the credit in respect of the CSR activities. The reason is, one is whether section 17.5 is applicable in respect of the transaction. 17.5 says that goods lost, destroyed, or disposed of by way of gift or free sample. So whether section 17.5 is applicable. The next important is whether CSR activity is it incurred for the purpose of a business. So therefore, my view is that the CSR expenditure is incurred only for the purpose of a business. The reason is, this is obligated by the Companies Act. According to section 135 of the Companies Act, I am incurring these expenditures. So therefore, this expenditure is incurred only for the purpose of a business. Therefore, I am eligible to claim this expenditure. But no doubt, whether section 17.5 is applicable. My view is it is not being given by way of a gift or disposed by way of a gift. Therefore, section 17.5 is not applicable. But you must be very careful whether schedule 1 serial number 1 is applicable in respect of the transaction. That is permanent transfer of a business asset or disposal of a business asset on which input tax credit is claimed. My view is that is not applicable in respect of, my view is schedule 1 item number 1 is not applicable. Therefore, you can claim this expenditure. So this is a CSR expenditure. This is very important. The next important is in respect of bad debts. Sir, I raise the invoices, I paid the tax, but the person is not paying the consideration because of COVID-19. They have closed the business. I am not able to search them. Then in such a situation, can I claim? It is not possible. You cannot claim it because you cannot issue the credit note. Credit note can be issued only in respect of a certain situation. This situation is not there. Therefore, you cannot claim the refund. So that is the next important. So therefore, CSR expenditure we have covered. The next important is rent. So the owner, what is happening? So the owner, so they let it out the property to various commercial establishment. Commercial establishment is let it out to the various tenant, but the tenant is not paying the rent. Then in such situations, what they have to do? Whether they are liable to pay the tax or not. According to me, it is a continuous services. It is a continuous supply of services. Already the agreement is there. Already they have entered an agreement. So therefore, the taxability is triggered according to the agreement. But what we have to do? Then in such situations, no doubt, you have to sit with the tenant and you have to revise the agreement. And then whatever you are receiving on alone you are liable to pay. If you are not receiving any rent, if you enter an agreement to that extent that they are not going to pay another 2 or 3 months, and accordingly your agreement is revised, your terms and condition is revised, then in such a situation you are not liable to pay. Otherwise you are liable to pay because it is a continuous supply of services. Therefore you may get into the issues. So therefore these are all the important issues that I would like to cover within the time is stipulated to me. So thank you once again for the organizer, Mr. Hemant Kumar sir and Vijay Anand and Gopalakrishnan sir for giving me an excellent opportunity to share my views. So thank you sir, thank you for all of your question.
Thank you very much, sir, for the vibrant speech. And any questions from the audience, you can raise your hands so that I can give you opportunity to speak with the person. Any questions? You can raise your hand or type the question and answers. Sir, one question is there. Sir, what about GST annual return for the 2018-19? I think it is extended up to 39/20. Will there be any further extension? Kanadakondan Mohan J.
Yes sir. So we have to see sir, we don't know as on today. The date is being extended up to 39. We have to wait and see.
Any other questions? So thank you very much, friends, for active participation. And of course, so we started our continuous educational program. So that let us start and take it up. And on behalf of Anna Nagar CP Study Circle, myself as a convener, the capacity as well as the Bhaskiran as a co-deputy convener, we thank very much for the both speakers for this wonderful session. So we'll have one more session in this very shortly. I will announce you. So session will be very interactive and it will be interesting topic to take it up. At least 2-3 meetings will be conducted. I am planning for this month, before the month, because we already lost last 3 months CPE meeting. So our educational program, continuous professional education program will be continue. Sure. So thank you very much, one and all. Namaste.
Thank you sir. Thank you for all.
Thank you. Jai Hind.